morning, everyone, and thank you for joining us today. My name is Elias Ghanem. I am the Global Head of Market Intelligence of Capgemini, and I am coming today from Paris to join Dom and Kirti that are in Singapore. And today, the three of us, we will walk you through a new concept, a new report that we are launching, which is about putting AI in the middle of the experience. The name of the report is Pioneering Intelligent Banking, and we will be sharing with you the report at the beginning, and after that, I will be joined by Dom Brown, who is Episode 6 MD for APAC, and Dr. Kirti Jain, who is the Head of Insight and Data for Asia Pacific and Middle East at Capgemini. So let's jump into it directly and start with our report about pioneering intelligent banking. And to start with, the Pioneering Intelligent Banking repose on an interview set. We have interviewed more than 100 banking experts around the world to capture their point of view about how AI is being embedded into the financial services. Three main conclusions that comes out of the report. First, accelerate transformation to cope with the heightened digital demand. Second, COVID-19 accelerated the need for conversational banking with no surprise. And finally, AI is the bridge between customer expectation and the bank's need. Why are we saying these three conclusions? First, acceleration of the transformation. The banks shift from conventional touchpoint to digital capabilities. Most branches got closed, many of them will not reopen, and thus the digital network, the digital interaction is at the heart of the future. COVID-19 in reinforced conversational banking. What have we seen for the last few months? A major uptick in call volume demands, and banks need to increase their focus on the next-gen communication channels. And AI is the way forward, and AI needs to evolve to become at the core of the transformation and make it the center of the whole data centricity experience. So why is it imperative to scale the digital transformation? And first is because what we could see is the pandemic sparked a major shift on the retail side as well on the SMB side. Let's look into that. Consumers. The consumers are strongly shifting to digital engagement across all channels. Look at some data points. We looked at the customer before COVID-19 and within COVID-19. What can we see? You could look at all the numbers. All the numbers are building up. The customer adoption of digital is building up nicely. And then if we look at the bottom one and we look at the interaction via banks and chatbot, 6% increase in 6 months. Adoption is all over the place. But if we look on the other side, on the SMB side, SMBs are becoming much more embedded also in digital experience. The SMB during COVID-19, 43% of the SMB want digital invoices fully integrated with their accounting software. 70% of the SMB prefer using a cash flow management tool if offered by their primary financial institution. But what can we see here also? There is a major shift when it comes to loyalty in terms of being loyal to their traditional players. Almost a quarter of the SMB claim to have had the same primary banks since 2008. However, almost one of two, 42% of them are considering a bank change in the next 12 months. So clearly we could see that the world is changing. It was changing and COVID even accelerated. So as a conclusion, consumer and SMB are demanding a switch from face to interface so they can engage easily with their provider. And why are they doing that? Well, Fintech are leveraging their core competencies to personalize and explore new way of doing business. What makes a Fintech offer a better experience? Easy to set up an account, attractive fees, they don't have branches, so they are much more into transactional expenses only. They are mobile centric, everything is personalized, they power the data and they make it talk to make my life very personalized. They have integrated different solutions, being personal financial management tools or any others, in an easy way. And finally, they expand the product reach and the market day after day. And when we look at numbers, what can we see? That you could see that here we have shared the consumer challenger banks as well as the B2B challenger banks. Look at the numbers, they are building significantly. Let's look at it. Nubank in Brazil, launched in 2013, really not a long time ago, 25 million customers. And today, with a market cap of $10 billion. N26, we've all heard about it, out of Germany and now reaching across Europe. They have a 3.5 billion valuation and more than 5 million users around the world. But also we could see that the B2B segment is attacked. Brex, Tradeshift, having more than 1,000 customers in the US and 2.6 valuation when it comes to Brex in the US. Clearly, you could see on the right that not only they are entering through the first business, but there is a diversification happening. And if you look at Brex, partnering with SAP for expense tracking integration. So what can we see here? That the fintech are at the forefront of the change. They have been evolution from just disrupting the market to become a mature players. So banks are shifting away from conventional touchpoints toward enhancing digital capabilities. Bank branches are shutting down, either temporary or definitely. And look at the bottom left here, 63% of the banks plan to close nearly 1/3 of their branches permanently because of the crisis that we are going through. And 74% of the executive are putting IT budget to automated chatbot and AI-driven voice assistance. So you could see on one side, we close branches. On the other side, we need to have better channels of engagement. So what's the way forward for banks? Well, building new capabilities, either by building them themselves, by buying them from the market, or by collaborating. And we could see very interestingly lately, Amazon announcing the collaboration they're going through with several banks, as well as Google that is planning to launch a credit account with several banks around the US. So the challenge is, while banks are transforming digitally, are they still humanizing the digital experience for consumer and businesses? And this is the challenge that we are seeing. Make it digital is good, make it human digital is more difficult. So that's why it's time to build an intelligent banking value chain so it looks human and it's fully digitalized. How do we do that? Let's backtrack here and look at the situation. What do customers want? Customers are looking for personalized product and services, ubiquitous banking anytime, anywhere, superior experience, digital channels. What do bank wants? Optimizing cost allocation, better engagement, better retention, better maximization, better profit, higher customer value per customer, and profitability. So what can we see? While customers are looking for emotional connections, banks are focusing on improving shareholder value. Clearly, there is a challenge here. There's a divide between what customer wants and what banks need. The solution to make that work, AI. And why are we saying that? Because when we look at the bank's technology priorities, we ask them about what are you planning to do looking in the future between running pilots and taking it at scale. What can we see? Banks are now investing in implementation at scale around big data, about API, about cloud. So they are putting the basis, enabling the technology that will set up the stage. And if that works well, it will lead to AI technology that will witness a higher traction in terms of intelligent automation, in terms of AI and cognitive capabilities. And I love the statement here. 85% of the banking executives say that AI and AI-powered automation will be the top tech priorities going forward. So it's time for the banks to transcend from digital banking to intelligent banking. And that's the first concept that I want to bring, evolution from digital to intelligent. How do we do that? Well, an AI-powered transformation is the building block for better operational excellence, better customer experience, and better risk management. So here are the three outcomes of it: cost optimization, better experience, and a better mitigation of the risk. Let's look into it. When we engage with the executive and we ask them, why do you think AI could help you? Love the answer they gave us. Improvement in productivity due to eliminating repetitive work at task, cost saving from optimizing the workforce, and you could see almost 70% of the exec said that bank could achieve up to 25% cost savings, and how important cost savings is these days, as well as a productivity improvement from AI implementation. Let's move to a better experience. A personalized experience, thanks to AI, will increase the NPS score, will reduce customer churns, and 68% of the executive said that they can have 25% improvement in customer satisfaction. And finally, when it comes to mitigate financial and operational risk, you can see as well being more compliant and reducing the false positive, which has an immediate impact on the business. And 3 in 5 executives see 25% improvement in their risk management capabilities by implementing AI. So clearly AI is here to help, in experience, in cost, and in risk management. The potential is huge. Doing it the right way is essential. And here, when we ask the banks in terms of the AI initiatives to boost the end-to-end value chain, where are the area where banks are piloting AI use? You could see that they want to do it in financial steering and reporting, understand customer needs, workplace safely, and so on and so forth. But more important, the AI maturity, unfortunately, remains low in the banking sector. And when we compare the banking sector to the other industry, we could see that life science, retail, consumer product adopted AI in terms of pilots and launching, while banking is way away out of it. When we say 5%, this means that only 1 out of 20 pilots on AI are successfully scaled by the industry. 1 out of 20. Now, of course, life science and retail started earlier, did it on a larger scale, and they're not able to offer it. Time for banking to step up here. And when we say to step up, how to step up? 4 challenges ahead of the banks. The people to do it, the tech to be able to implement it, the business out of it, and the finance. As you could see here, most of the banks still believe that there is a lack in middle and senior AI talent, not enabled to track the performance of the AI, not able to have the right governance model, and not able to understand the ROI behind it. If we look at the situation, banks today struggle to harvest the value and scale AI. 1 out of 4 banks do not realize the benefit from AI initiatives, and 3 in 5 banks do not realize quantifiable benefits from AI initiatives. Clearly, we are not ready to harvest the whole value out of it. So it's time now to move, and it's time to calibrate the systems to get the most out of the data. And we had a presentation yesterday from Sudhir Pai, who was talking about the power. Look at here that what banks are telling us and the key issue faced by bank to the legacy system. IT maintenance cost, IT complexity, inefficient integration and emerging technology. Clearly, there is an opportunity to have a better leverage of the data. And if we look at the right here, the data centricity is key for AI evolutions. Only 1 of 4 of the banks extract the best out of the data. And there is a growing demand for alternate data. I want you to know me, not only what I have the information with you, but all my social behavior outside. So to become AI at scale, it's time to revamp the core and become data centric. How do we do that? Long-term AI development require reformed culture and robust government. We're going to see now 4 pillars to get to the future. The first of them is the culture. 72% of the bank executives say their employees believe it is important to develop required AI skills, but 1 of 2 employees believe that AI will replace their job. So culture is a big challenge. Governance, is governance in place? 50% of the bank have inadequate AI governance framework. And it's important to consider the element to get into the right AI governance framework. So, but also for us, what is very important is where is AI in the business? In the traditional way, banks start by building a data platform, a data lake, a data warehouse. From there, they evolve to a data management where they're starting having the information, getting use out of it. They become business intelligence, and at the end, AI come as a cherry on the top. At Capgemini, we believe that the future is different. AI should be at the core of the banking transformation. And from the core, we add to it the business intelligence, the data management, and the overall big data platform and data lake. So AI should be at the core and should catalyze the transition from intelligent bank to intelligent ecosystem. We went from digital bank to intelligent bank, and now we're going from intelligent bank to intelligent ecosystem. And why is that? So how do we scale the experiential banking with conversational commerce to move into the famous ecosystem that we're talking about? So what has COVID done? Well, COVID accelerated the conversational commerce adoption. And what is conversational commerce? Well, in fact, it's the interaction of the consumers with businesses across the new channels, messaging, chat, voice technology, and into the banking, the conversational commerce become conversational banking. If we look at the survey with our executives, very interesting. Clearly, call volume went to the roof. And as such, banks are planning to increase their focus on the next gen communication. 58% of the bankers say they want to invest in AI-driven voice assistant, almost 70% in automated chatbots and in social media apps. So AI can usher the banks into the new way of engaging with the customer. However, current adoption continues to be low and with a lot of challenge. Look at how it is today in terms of adoption. Online retail, 34% are already having conversational commerce implemented, where only 20% of the banks are there. 20% remains a low adoption in FS. Almost 70% of the banks are not satisfied with the performance of their banks when it comes to automated channels. When we come to put some numbers behind that, close to 90% of the bank executives believe that low adoption of AI and data management capabilities are having a major impact on the voice assistants. So collaborate to overcome the situation by joining the ecosystem. What does it mean here? What if we improve the customer experience while reducing cost? What do you think of that? And to make that happen, well, work with the ecosystem, leverage the big tech that are here outside and making it work. When we look at the voice assistants impacting operational customer experience, what can we see? Operational excellence, 84% of the banks say that cost savings with optimized customer care and support service. And if we look at the bottom here on customer experience, 74% of customer acquisition and retention could be improved through a hyper-personalization service. So if we look at where are the big tech are now into the place. From a voice assistance and from a channels, they have it. They have the critical mass and they have the devices implemented. Google Assistant has more than 500 million users around the world. And some banks, as you could see, are starting to adopting the voice assistant, Google, Alexa, Siri, to make it work. So we look at how to evolve. Well, it's a 3-step. First, it's about assessing. What we have done here is we divided all the tasks that could be automated. And we made them between what the complexity to automate the task. We also looked at the impact when it comes to improving from a customer experience KPI as well operational KPIs. And we improved under the customer experience, we divided into NPS, cost efforts, increasing loyalty, and then same on the operational excellence. And we tried to evaluate for each one of these initiatives the impact. Give you two examples here. Let's look at third-party services and product to customer. We could see that this one, if we do it and we automate it, it has a major impact on the NPS score as well as insight gathering. But if we look at another one, managing processors query, applying for a loan, KYC, by automating it, it will automatically reduce my efforts, reduce friction, and it will also help the banks reduce costs. It's time to understand where you are, measure the as is, and project the where do we want to be. And that's where the assessment ends. Build the readiness to move forward. How do we do that? Well, three pillars to do that. Have the right technology, have the right business, and have the right people. As you could see, technology, it's about building the API network, testing it and scaling it. When it comes to business, make sure that you have the whole business unit embarked on it and willing to test it and grow it. And finally, prepare the people in your teams to do it, reskill, upskill the employees to embark on the AI journey. And it's time to start. And how do we start? We move into the enacting, into the moving forward by using a hybrid approach with the right ecosystem partners. So let's look at what does it mean by that. We have the customer that need to be engaged. We have the customer that is already today leveraging channels that are already on their desk, being a wearable watch or being an Amazon Echo or Google Home. But how do we make these people interact? Well, here, this is where comes the middleware, the either done by Microsoft, Amazon, or as well done by the startup. These are the connectors between the number two and the customer, as well as the number four, which is the bank, and all the solutions that the bank has, AI solution and enterprise systems being the payment platform, the product platform, the CRM. The only problem, these boxes are difficult for them to connect. The bank does what? The bank owns the heart of it, the AI solutions, and owns also can work with the middleware to connect. But in order to bring all the value chain from the customer down to the bank, significant integration is needed. And that's where it's important, part of the ecosystem, to consider system integrators to connect the entire value chain. The exercise is not simple. It's important to do it to offer the right channel of engagement. So in conclusion here, it's time to build and adapt to a better digital demand. It's essential to evolve from a digital banking to intelligent banking to intelligent ecosystem. And it's time to make it together, evolve into an ecosystem and converse to engage across the assess, build, and enact approach. With that, we finish our presentation, and now it will be my pleasure to welcome Dom Brown, the MD for episode 6 for APAC, as well as Dr. Kirti Jain, who is our VP and Head of Insight and Data for APAC and Middle East at Capgemini. Gentlemen, welcome on this roundtable, and thank you so much for joining us today. Let's jump straight into the roundtable. Hi, Dom. Could you please tell us who you are and what is episode 6 unique value proposition?
Sure, thanks, Elias, for having me here and sharing also the interesting report. Back to your question, who we are. So E6 is a tech company, a fintech. The three founders are very experienced in the industry, having built over many years successful processing technology and payments products like multi-currency and loyalty, and also ledger technology. And what E6 has built is essentially an account ledger with a transaction processing system and combined with the next generation card issuing processing system. So a powerful combination, completely supported by around 550 developed APIs. Back to your question about the value proposition. so our proposition is to have a highly flexible, extensible, easy to integrate and highly scalable platform with the flexibility to be deployed either in the cloud or on-prem, so both choices. And we essentially help financial institutions or digital banks, other players like fintechs in the digital transformation journey to digitize assets or accounts so that those clients can actually innovate and launch financial products much faster. And the use cases, Elias, with a single code-based platform ranging from the ability to manage e-wallets, issuing card programs, and process, for example, multi-currency transactions to enable instant earn and burn capabilities for rewards loyalty programs. Quickly back to the history of E6. So E6 was established back in 2015. The founders developed that time the tech stack from scratch with all the experience I mentioned before they gained over the years, and launched the software platform end of 2017, 2018. And the interesting part here is, as a startup that time, one of our first clients we onboarded was HSBC here in APAC. And this collaboration has since then expanded. Around 5 months ago, we closed our Series A funding round with HSBC as a lead investor of total 3 strategic investors backing today now E6.
Wow, congratulations. Wow, having HSBC as a client, as an investor is not an easy task. Could you tell us a little bit, talking about HSBC, could you tell us a bit more about your collaboration with HSBC? And what is the value added that a company like yours could bring to an HSBC?
Yeah, sure, Elias. So as mentioned previously, all started back in 2018 when we went to the market with their platform. And when HSBC became a client of E6, it was, and it is actually today, for a very specific digital initiative and use case where we help the bank to develop digital wallet propositions to better serve their customers. And for this, the bank wanted to leverage next generation tech to service their clients' need in a new digital way. To your second part of the question, let me answer this a little bit more generally in terms of value add. So when you look at tier 1 banks, you often face the reality that over the years, lots of legacy technology has been built up, either internally or externally. And those banks face today more and more competition from the existing and upcoming challenger banks. And as you mentioned earlier in your report, the traditional banks go different approaches to build new digital capabilities to be able to cope with those new competition and also new market demands for digitization. So as you mentioned, Elias, either they build themselves, they buy, or they collaborate. So on one hand, from episode 6 perspectives, we see us there as a collaboration partner with the banks so that they can use our single code-based platform as an enabler to digitize and to build out their digital journeys that their clients want and demand. And they can start like HSBC actually with one specific use case, like for their digital wallet proposition, and then can easily expand and extend to any other use case, as an example, like adding a card program or a loyalty program or any kind of payment-related products. And the value here is a platform, as mentioned earlier, is highly flexible and extensible so that you have an advantage for speed to market when launching new products with new use cases on the same single code-based platform, which is very, very important these days because competition is not sleeping. And we provide the so-called underpinnings for these initiatives easily to be integrated into internal and external systems.
Impressive. I just want to jump to Kirti, and I'll come back to you as we come about the collaboration. Kirti, thank you so much for joining us as well. First, could you help us understand who you are and what you do at Capgemini?
Sure, Elias. Pleasure to be here and really happy to be participating in the roundtable. So I would say, if I have to tell about myself, I would like to introduce as a constant learner, an applied realist with strong passion for data and people. And I think that is what has really helped me because I turned my passion into my job. I have been doing data and analytics for all my career, last 25 years. I love to think out of box and make that dream possible. At Capgemini, I manage data and analytics global business line for Asia Pac and Middle East. And again, the job is exactly what I like, which is how do I bring together these 3 participants, people, data, and applied outcomes for enterprises, for the businesses? How can I combine and merge them together to bring more value and to create larger outcomes for them. Now, very briefly,
You're at
what
the
do I do
center, huh?
at Capgemini?
Yes, thank you. You're really at the center of this new ecosystem where people, systems, and enterprise come together. I want to ask you a question. When we talk about data and how data and data platforms are enabling businesses or enabling banking to survive and grow in current environment.
Absolutely. So I think data, we can put them in three buckets. So first is the data technology, which is the guardrails where all the technology, all the data flows. So that's the foundation. On that foundation, you build or you create core data management activities, which turns that data into asset. And then that asset, which is data, is being used to create value for organizations. So that's what I call data and data platforms merging together. Again, this data and data platforms, they are enabling the transformation journey to deliver business value and insights to action, leveraging AI. I think by building this one integrated I&D platform or integrated data and analytics platform, you go from right to left. You look at what is the business outcome the customer want, what are the tools and frameworks required, how you build a platform, integrate all this together and create the impact for the organization. So that is what I call like a single enterprise platform which delivers insights at every point of action, and it supports the CXOs in shaping and reimagining the new data landscape. Again, we have just heard yesterday another Capgemini group where they spoke about the platforms, and Capgemini have likewise of 890, etc. But the key point is how do you don't just survive, but you thrive on data.
Fantastic. Look, when you say trying on data and jumping on that and link it with our report that we talked about it today, how do you perceive that AI could enable the intelligent banking experience? And could you share with us some examples to make it more real?
Sure, wonderful. I think so. How an AI enables the intelligent banking, and I would say the adoption of AI in banking is continuing to transform the industry. It is providing higher value, higher levels of value, more personalized experiences to its customers. It's reducing risks for businesses, and it's increasing opportunities involved in the whole financial engine of our modern economies. Now, AI has penetrated the banking industry to make the processes like risk assessment, fraud detection, customer engagement, customer targeting a lot more easier. Whether it is in front office or in back office, several tasks like conversational banking, which you just mentioned earlier, whether it is about anti-fraud, credit underwriting, these are all being decided using AI algorithms. Superior customer experience is another thing which is really transforming how the customer journeys are being evaluated, they are being assessed, because we need to be cognizant that customers have choices. So we need to provide them the best possible, and this will make what we call being intelligent banking.
Brilliant. Could you give us some examples on
Yes,
some banks who have done it?
Sure. Just coming on that. So banks should become AI first in their approach. I think data democratization and AI first are the two things which will help them become that intelligent. An example I would say is one of the largest Singapore banks. Most of us would have already been doing business with them. They use AI to manage cash withdrawal from their ATMs. Now they have tuned it so well and efficient and customer friendly that their customers don't go from the ATMs without pulling money, because otherwise a lot of the times what happens is the ATM is already vacant, the cash is run out. So it's an extra trip for the customer, it's a loss of business for the bank. So that is one situation where AI has been used to understand customer journeys, different customer behaviors, different demographics, geography understanding, so on and so forth, to answer this. I'll take an example of one of the largest US banks, which have built credit card products for even small segments of customer cohorts. And they have improved the product feature such that it has become segment of one. So they can pretty much define each of your customer, and say that what is this customer needing. Now, all of that is driven by AI. And that is what, as I mentioned, is intelligent banking. That is what is intelligent banking and human intelligence working together to deliver something significant.
Amazing. The example you have given us is one is front office and the other one is back office. And it shows clearly that AI is transparent to the consumer, but is enabling a much more powerful, personalized, and cost savings solutions. Impressive, the example you give. Thank you so much. Hey, Dom, looking more now we talked a lot in the report about the collaborative framework. When it comes to analytics capabilities, which I understand is your strengths, how a company like Episode 6 can help client leverage AI to move faster into intelligent banking?
Yes, sure, Elias. So let me step back a little bit. So when you look at our platform, so we already have millions of consumers and businesses using financial products linked to the platform. And this means ultimately also we process today millions of transactions per day, despite the fact that we are still a young company, actually. And this means also a lot of data points are going into this platform. And the challenge a lot of banks normally face is how can they get the data out of the platform? In which format, for example, and use this data for their own data analytics. Data at the end is the lifeblood of AI. Yeah, I think Kirti also made it quite clear now. And what we came up with, our platform provides instant access to data using a Cassandra-based reporting tool. So turning data access actually from a challenge to a strength. And downstream systems are powered with relevant data in their own preferred formats and data values to perform analysis. So our clients are actually able to move towards intelligent banking, leveraging on the data and do data analytics and using AI for that, for example, to offer consumer-based products and services by understanding customer needs and preferences better, improve risk monitoring or data monetization, and also cross-sell other financial products to their clients.
Impressive, impressive. Look, as we're coming out of time, last question to you, and if you could give me a short answer. During the presentation of the report, it was mentioned to enact implementation, we need to use a hybrid approach with the right ecosystem partners. One part of the ecosystem mentioned were system integrators, like Capgemini, one of them, to use APIs to help end-to-end integration. How you, as a startup, how do you rate the importance of APIs these days? And do you see any specific innovation happening in the field?
Yes, good question. So from our view, APIs are very critical and important these days, especially when you want to achieve ease of integration to get access to important data and systems. And when you achieve ease of integration, you're also able to reduce the integration time as well, which is very important for banks. So early in the days, a lot of legacy systems ran silo and were absolutely unable to easily integrate with other systems. And this is changing now. As mentioned before, we ourselves leveraging heavily API technology to provide a next-gen advanced platform. And from an innovation perspective, look at open banking initiatives. Open banking is driven by APIs to provide better customer experience and consolidated access to customer financial accounts and assets for better planning. And in APAC, as you know, you can see different government-led initiatives for open banking, like in Australia, India, Hong Kong, and also here in Singapore.
Clearly API is the way forward to personalize. Kirti, looking forward, how can API help bring financial and non-financial services together to offer a more compelling customer experience?
Wonderful. So I think as Dom mentioned, APIs are becoming a critical part of the whole ecosystem. Very true, very, very true. So I think future would not have distinct industries working separately. They will all be working in tandem. Okay, that's the first point. Second is with build of these platforms or build of these ecosystems, I think the boundaries across industries are getting blurred. Now, getting those boundaries blurred means creations of marketplaces, which will converge all of these different industries, whether it is banking, with insurance, with automotive industry, real estate. They all will merge together, and for customer, it will be just one front face, one front office. I'll take example. If we talk about telcos, and if we talk about 5G, whether we go next to IoT, we talk about edge computing, these all are providing compute opportunities in a real-time manner. And if we overlay context about the customer, That means where are they right now? What type of situation are they into? Which geography are they standing on? Then the enterprises are really getting all the important information to win the customer's mind space. And that is what I believe the API economy, leveraging through the AI at the back, will be able to merge together all the industries and able to give a superior, compelling customer experience, improving what clients call customer is the king.
Fantastic. And by doing that, better engagement, better retention, better profitability. That's why
Absolutely.
AI
Absolutely.
should be at the core of the evolution rather the cherry on the top, as we were mentioning. Thank you so much, Kirti.
Exactly.
Guys, Dom and Kirti, thank you so much for the great insights. Really very useful and very insightful to have the conversation with you. Let's turn now on to the audience for your questions.